Hey Rahul, we're live. Um,
Okay, welcome everybody to the first office hours. Um, this is the first bit of Q&A, first bit of content you're creating that's live and direct with our users. And we're gonna be talking about algorithmic trading and how to approach it. Mary Angela, do you want to introduce yourself?
yeah. So, so I'm Mariangela Martinez, content marketing specialist here at Alpaca. A fun fact about me is that I broke two fingers and an elbow in a span of 2 years.
Oh boy, that must be painful. Um, my name is Rahul. Hey everyone, I'm a software engineer here at Alpaca. I work in the developer experience team. One fun fact about me is last year I was able to be on the set of The Witcher accidentally. That was a really cool experience. I don't know if you guys watched that. Um, yeah, that's one fun fact about me. Um, so just jump right in, since we don't have that much time. So the seminar is going to be in three main parts. The first section is kind of the meat of the presentation, and we're going to go over how to approach automated investing. And we'll be talking a lot about kind of like the different parts of the process, like how to come up with ideas, how to build it out, how to validate your ideas, etc. The second part, we'll do a Q&A where you guys can ask questions and we'll answer them directly. And then finally, we'll have some resources that you guys can use on your journey towards algorithmic trading. Cool. So before we get in, I kind of want to talk about the goals of this first office hours. So the goal isn't to go too deep into any specific part of algorithmic trading. What I really want to do and get you guys to appreciate is how to develop a high level framework for successfully developing automated investment strategies. A lot of people have a difficult time thinking about where to start. It's such a huge problem. How do you create a strategy, test it, and actually deploy it? So we want to break it down and make it approachable. The second part is we're going to get into some practical examples that you guys can use to apply to your own work. Some snippets of code that you can reuse. Cool. So automated investing is hard. It's the intersection of software engineering, finance, and mathematics. There's a lot of things it takes to build a successful strategy. And during this presentation, we want to focus on big picture stuff. So we're probably going to skim over some smaller details, things like what a function is in Python, what stocks are, what various order types are. We're going to assume that you know what those things are. But if you don't, you can always come back and review once you do know them. Cool. So again, so investing is hard, right? Although we're trying to do algorithmic trading, there isn't really an algorithm, one way to approach doing it. Um, and everybody has their own development process, and this is just one way. But what it really helps to do when you have a development process is it breaks down this really difficult task of building this trading strategy, with an idea and monitoring and deploying it, and it breaks down into like specific parts that you can approachably attack. So this webinar was going to go over each of these parts uh, briefly, and some of these in more in detail. Again, staying pretty high level. Maybe in future seminars, we go more deeply into each of these parts. So briefly, the first step is ideation. Whenever you want to start the process, you have to have an idea to build. And this can be sourcing ideas, from articles, etc. And when you find an idea that you like, you might want to build it out. And building it is essentially taking that idea of the strategy and expressing it as code, programming it in code that you can actually test and eventually deploy if it's good. And finally, once you've built it out, the next part is testing it. How do I know the strategy that I've built, this code I've written represents this trading idea, is actually valuable enough to deploy with my own real money, is worth enough to put risk on it. And that in itself has a lot of different techniques like backtesting you may have heard, or paper trading, etc. And you'll find that most of your time is in this process where you have an idea, you build it out, you deploy it. I mean, you validate it. If it's not good, you go back to the drawing board. If it is good, deploy it. And deployment, there's some details there we can talk about later on. And finally, you monitor it, which is my favorite part. And partly because everything else by then is finished, but also because it's the most interesting part where you have to answer some difficult questions like, is my strategy performing well as expected? So that's kind of an overview. We're mostly going to spend some time on the ideation part and the building part because I think that's where most people get stuck, right? They don't know where to start. But later in future office hours, we can definitely get into the other parts. So strategy ideation and research. So there's this quote at the top by Jim Simmons. I don't know if you guys know him. He's the hedge fund manager of Renaissance Technologies, which is one of the hedge funds of all time. And he said that we search through historical data looking for anomalous patterns that we would not expect to occur at random. And the thing I really like about this quote is this specific part. He said, search through historical data looking for anomalous patterns. And that's kind of at the heart of all algorithmic trade strategies. And it can be interpreted in many different ways, meaning, whatever the patterns can be, the definition of pattern is ambiguous in that sense, right? You're looking for some sort of pattern in data. So it's difficult to generate a systematic approach to generating good ideas because everybody brings in their own experiences and personal skill sets into how they see the markets or how they look at data, and you'll probably have your own preferences as well. But it's usually a good idea to have sources of ideas for strategies. So that might include watching the markets, reading forums, papers, articles, or books. There'll be some resources at the end for you guys to use for inspiration on your journey. While we're talking about ideas, I kind of wanted to give a scope of what's possible for in the space of algorithmic trading. Ideas can be simple or sophisticated. I have some ideas you guys can read through. Some of them are simple. Maybe it's just buying a stock and holding it for a certain period of time, not much data. And other ones can look at alternative data sets like weather data or e-commerce data and use some very sophisticated models to make predictions. And it's important to note that sophisticated doesn't always mean better. Sometimes you'll find a nugget of gold in a simple strategy that's grounded in some financial idea with some good risk management. And in fact, that's, I think, fairly common. So I made this part for people who don't know where to start looking. Sometimes there's so many different places to look. You don't know where to start looking for those strategies. So these are some questions you can ask yourself to start narrowing down the scope and hopefully finding a targeted area to start looking and thinking about opportunities. Of course, you don't have to limit yourself while you're looking, but it's a nice place to start if you're having trouble looking for ideas. So you might ask yourself, what market do I want to trade? Of course, Alpaca is restricted only to equities and crypto, but you can expand this to other security types if you wish to. And this question is important to ask. One, you might be limited by legal restrictions. For example, you might not be able to trade crypto if you live in New York. And another thing to consider is your personal preferences. If you want to be able to trade while you're able to look at the markets, aka not during work hours if you work, you might want to trade crypto because it's 24/7. Another question to ask yourself to narrow down the scope of what strategies you want to look at or you want to investigate is dictating what class of strategies do I want to start looking at. There's two main classes of strategies. There's event-driven strategies and there's rebalancing strategies. Now, event-driven strategies are strategies that are waiting for some specific event to take place in the market. Now, this might be some moving average crossover that you're looking at in the data. You might be looking for some kind of earnings report that does better than expected. But basically, there's some event that takes place in the data and back to it in your trade. The next class of strategies is rebalancing strategies. Rebalancing strategies are essentially strategies that trade at specified intervals. They're not as sensitive to time because at every month, every first day of the month, you'll place a trade, something along the lines of that, right? They're generally more focused on the actual picking process, meaning, how do I pick value stocks, things of that sort. And the final question to ask yourself is, what data sources do I want to look at? Each strategy, each idea will usually depend on some kind of pattern between data and the market. And that data source you're looking at can be very expansive in possibilities. You can, of course, look at market data from Alpaca's market data API. You can look at fundamental data, or you can look at alternative data like satellite imagery, or social media posts, product reviews. It's kind of endless. And when you look at data sets that other people are looking at, there might be opportunities there that you might find that other people haven't. But lastly, research and ideation is all about being curious and exploring data, looking for patterns, poking and prying for little insights into the market.
Also, for everyone watching, we're posting comments and questions in the channels. So if you would like to answer and engage more, that'd be amazing.
Thank you, Mariangela. So the next step, once we have our idea that we test out, we find some interesting insight from some kind of forum, and maybe we have a twist on it. We want to test it out, and the first step is we want to, and that means writing some code that represents our idea and can submit some orders. So I have a very simple example strategy here that we'll use to guide us through this part. And we'll get our hands dirty in this section. We'll be going through a bit of code and how we would actually implement this kind of strategy. So in this example, we're going to build a trend following model. And trend following here just means I'm just going to go with the trend. If it's going up, I'll buy. I'll buy. If it's going down, I'll sell. And in this case, it'll be a rebalancing strategy because at every day, doesn't at 9:45 a.m. I'm not waiting for some specific event. It'll always check on daily. Actually, it might not be a rebalancing strategy. I'll explain that a little bit further. So regardless, every day at 9:45 a.m., we're going to attempt to predict whether the Nasdaq 100 ETF has shifted to a bull market or bear market. And the way we'll do that was we'll use a 10-day and 50-day EMA crossover to determine the trend. And the reason I said is that it might not be a rebalancing strategy is because we're looking for a crossover. And that is an event that takes place in the market, or in the data, rather. So what does a crossover mean? To define a crossover is that there was one day where the 10-day average was below the 50-day average, and then the next day, the 10 was over the 50-day average. So at some point, it moved over it. And that's some event in the data that we're watching out for. And we're going to use daily data because we're looking for 10 days and 50 days EMA. So if our model says that QQQ, Nasdaq 100 ETF, has shifted to a bull market, we'll go long, and for bear, we'll go short. And if nothing's changed, we'll just stay flat, meaning no new orders. It's pretty straightforward example. We're just going to do an EMA crossover, and we're not going to go too crazy on the data sources we're using. Okay, cool. So just breaking it down a bit more so that we can understand how to start building it out is, first, we're just trading one symbol, one market, and that's QQQ. Our signal logic will have two parts. We're going to have one piece of logic that says if the 10-day EMA crosses over the 50-day EMA, we'll go long with 100% of our portfolio, just keeping it relatively simple. And if the 10-day EMA crosses below the 50-day EMA, we'll go short with 100% of our portfolio. Since we're calculating EMAs, we'll require some price data, and we can get that from the market data API. Now, this is kind of like a framework within the framework. So for the building section, there's a way to approach the design pattern to building out the trading strategy. If you built enough trading strategies, you'll notice that there's always three parts to any trading strategy when you code it out. And at some point, you're gathering data, and then at some point, you're computing a signal, and then at some point, you're balancing your portfolio, meaning you're submitting some orders. When you're gathering data, you might make an API call, and then when you compute the signal, your model will consume that data and put out a buy or sell or don't do anything signal. And then with that signal, you'll decide how to change your portfolio. And at the heart of it, you'll find that there's some kind of engine, a loop or a scheduled script call that determines when this fires, how often we go between the gather data, compute signal, and rebalance portfolio cycle. So we're going to keep this in mind as we build out the code. There'll be a bit of code to gather the data, computing the signal, and then rebalancing the portfolio. So we're going to start off with the trading engine. And this part, I think, will be the most useful because you might actually be able to just take the code we go over here and use it on your own. Because the trading engine is the most reusable part of your code. It'll be the same for most strategies. And there's different ways to implement it. One way to implement it is using an infinite while loop. Generally, the simplest. You have a while loop, and the script is always running as a process, but the logic will only execute at a specified time. Another way to implement it is a cron job. Cron job is essentially a service that'll execute some kind of command at a designated time. So you can tell it to execute this Python script that rebalances your portfolio every day at 9:45 a.m., etc. Another way to do it is using serverless functions. Today, with so many cloud services, there's services that let you execute some kind of script at a specified time. This one is an option as well. So we're going to go with the infinite while loop example because I think it's the easiest to demonstrate. So in this example, we were initially going to, just some background, we were initially going to jump into the code and in the IDE, leave the presentation and start coding. But it turns out that there's usually errors that pop up and the experience can kind of become not that smooth. So instead of doing that, I took some screenshots of the code, and I think that's a bit easier to go through. So in this example, we're creating a infinite while loop trading engine, and I'm just going to run through the code a bit. So line 10, we have the while true, and this will run as long as you don't break the loop at some point. Here, we're using the new Alpaca Pi SDK, which lets us create clients to interact with the API. So I'm creating a trading client here. And you might wonder, why am I creating that? Because I'm not going to be submitting any orders with it. All I'm going to be doing with the trading client is using the get clock function to check if the market is open. It's a pretty useful function, right? Because sometimes you might be waiting for you don't want to run a bit of logic when the market is closed because it's just wasted computation, or maybe you're submitting orders at the wrong time. So it's a nice thing to have, just so you're not doing stuff on Saturday or Sunday if you're trading equities. So over here, I'm grabbing the current hour and minute. And in our example, we wanted to run it at 9:45 a.m. every day. So 9:45 every day. And we want to make sure it's also a day that the market is open. We don't want to run it on a Saturday or Sunday. So that's what this bit of logic does. And inside, when the requirements are filled, 9:45 on a trading day, we first get bar data, and then we compute the signal with our bar data or whatever data source in your example. And once we get the signal, we process the signal into orders. And this kind of breaks down the cycle. So while our trading engine is running, we'll cycle through this over and over whenever the requirements are met, of course. And then at the end, if nothing happens or we submit a trade, we'll just wait 60 seconds because there's no reason to wait. Let the while loop run without interruption. Okay. Yeah, that's the training engine. And now we're going to try to find these parts individually and see what they look like for our example strategy. So again, we'll be using the SDKs. We'll be using the Alpaca Pi SDK, which is the Python SDK for the trading and market data APIs. And in this section, we'll be getting the bar data that we'll need to compute the EMAs for our crossover strategy. This part is only concerned with getting the data. So in your example, if you're using weather data or some alternative data set, it's all about getting the data and formatting it for later use. So over here, I'm using the stock data client to get bar data for about 100 days. We're getting 100 days of data just to be safe that we get enough data to do our computations. It's better to overdo rather than underdo. So over here, not gonna get too into the details again. If you want to learn a bit more about how these functions work, there is documentation for this and some guides. But I'm just trying to stay high level so that we can kind of attack the big picture. So we're gonna get bar data for QQQ between 100 days ago and today, and we're gonna get daily data. And we'll convert it to a data frame just to make it easier to process later on. And this function just returns that data. Next, once we have that data, we'll pass it into our next function, of course, through our trading engine, and it'll come into our get signal. And the idea of the get signal part or the compute signal part is, again, to use our model of our strategy and output some kind of trading decision. Like, are we going to go long, short, or do nothing? Here I'm using strings, but you can use enums. You can get fancy with it. So over here, just calculating the 10-day and 50-day EMA. I'm using the TALib library. It's a technical analysis library in Python that lets you calculate a whole bunch of different indicators fast. But it's not the only option. If you like technical indicators, you can, of course, use TALib. But there's also Numba and a few other options. But over here, TALib. And we're going to calculate the 10-day and 50-day EMA. And specifically, we need data for 2 separate days, 1 day ago and 2 days ago. 1 day ago is the latest piece of data we have, and 2 days ago is the day before that. And why we need 2 days of data is we're looking for an event where the 10-day EMA was below 1 day, and on the next day, it was above. So a crossover happened. And this logic essentially encapsulates that idea. So on line 14, if 1 day ago the 10 EMA 10 was greater than the EMA 50, actually this should be 2 days ago. This is a typo right here. If 2 days ago the EMA 10 was less than the 1 day ago, and if 2 days ago it's one sec. Okay, so I understand now. The code is a bit off, but hopefully the idea got across. The idea is over here is a bit more maybe explainable. So if 1 day ago the EMA was less than the 50-day EMA, and then 2 days ago it was greater than, what that means is that a crossover happened, or rather a cross under, actually, and we want to go short. And the opposite is true over here. the code is a bit lengthy, but I would take some time to copy over this, and it'll all be available, of course, and run through it. Um, the general idea is we want to compare the 10-day EMA to the 50-day EMA over 2-day period. Cool. So if we did crossover, return long as a string, and if we cross under, we return short as a string, just to signal to our strategy that we want to the decision we want to make for our portfolio. And otherwise on line 21, if none of these run, we just want to return none. And that just tells our trading strategy, that just tells our part that rebalances the portfolio to not do anything. Just keep what we have and hold it. Okay, so once we have the signal, and that of course is a string that is long or short or none, we want to make some kind of action on our portfolio. And first things first, if the signal is none, we'll just do nothing. So we can express that as just by returning none. And we'll use a trading client here again to make orders and submit them to Alpaca's API. So we're using our API keys and setting paper to true just to use our paper trading client. Okay, so first thing we'll do is close any positions. This is kind of like a dirty way of doing it, but I think it's best for demonstration. So we'll be using 2 orders if we want to make a change. First, we'll close our existing QQ positions, and then we'll create a new position if necessary. Of course, you can do this in a single order, but for demonstration purposes, I think this just explains a bit better what's going on. So we'll close existing positions or any other positions we have open, and we'll get the buying power we have left. And we'll use that buying power to fill up our portfolio with whatever side of the trade we want to take. If the signal is long, we'll create a buy order. So over here, I'm using an enum from the Alpaca Pi SDK that represents the order side to be buy when we submit the order. And otherwise, if it's short, we'll go short. And then what we'll do is we'll take the side and we'll along with the buying power, and we'll submit an order to Alpaca. So over here, which is a market order, and hopefully it'll fill up our new position in QQQ. Okay, so now that we have a strategy, we have some code that executes orders, takes some idea, calculates a model, uses a model to calculate some kind of trading decision, and then executes an order or doesn't execute an order based on a trading decision. We want to validate that idea because we want to make sure that it's trustworthy to put real money on. And this part is an art of its own. It's kind of a world of its own. There's back testing, there's paper trading, and I'm not going to dive too deep into it. If there's enough interest, we can definitely do that and do a deep dive on the various methods and things to watch out for and tools. But for now, I'm just going to go over the few main ways of doing it and some things to think about. So the first thing that's the easiest to do is making sure your strategy has some logical basis in reality. There is a caveat, right? It's not necessarily bad if your strategy isn't built on some kind of financial or economic idea. It's just a good sign. A counter to this is that Jim Simmons in his interviews have said that they don't really care too much about wireless correlations. They just look at strong correlations. And as long as the data is correlated to the market, they'll exploit it. And when it stops doing it, they'll just stop using it. So you don't have to use this by the book, but it's good to know if you do have it. It just lets you trust it a bit more because you'll know why it's working and when it stopped working a bit better. The next thing is having good backtest results. This one, there's some advantages, right? It lets you quickly test on historical data. You can test on 5 years of data, within an hour or a couple of minutes. Whereas if you tested it in real life, you would have to actually wait that period of time. So there are some disadvantages though. there's a lot of pitfalls you can fall into when you're back testing. It's easy to overfit. It's easy to mislead yourself, thinking you found the best trading strategy of all time. Just 10,000% returns. So there are a lot of caveats, but it's great if you have an accurate back test because it lets you understand your strategy on a deeper level. Another thing is having good paper trading results. Um, you can do this with Alpaca's paper trading dash account. Just run it through the paper trading API. Um, Paper trading results are generally more trustworthy than back tests. One, because you're not you're not trading on past market conditions. You're trading in current market conditions. Of course, there are some things to watch out for. If you're small slippage uh, adjustments in the real market, there might be slippage. In paper trading, there isn't any. And of course, it's really slow. If you want to trade over 3 weeks or a month of data, you actually have to wait that long. Uh, so they all have their own strengths and caveats, but it's important to know of them as techniques to gain trust in your strategy, enough so to deploy it with real cash. So finally, you've had this strategy and you've gotten some really good statistics on it, is making money, and you trust it, and you want to deploy it. Maybe you've picked out a brokerage, hopefully it's Alpaca, and you want to start running it. And there's two ways of approaching that. First way is to do it locally, and that's just running it on your personal machine, right? And that's easy, relatively easy. It's cheap. You don't have to pay for cloud costs. But the big disadvantage is your machine can fail, right? Maybe power goes out, or something happens, and the script you're running, that while loop, the trading engine, that process is killed, and so your algorithm is no longer interacting with the market. So that's the biggest risk. The second way of doing it is deploying it to the cloud. And there's a lot of different ways of doing this, right? If you thinking back to the trading engine part, if you want to do the serverless method, you kind of are restricted to the cloud, right? So if you want to use AWS Lambda, and there's a lot of advantages to the cloud. You have reduced risk of failure. Generally, nobody, your little brother or your son isn't going to come around and pull out the plug on your computer and ruin your trading strategy. So that's what the biggest one reduced risk. It's also accessible. You can access your script or your compute instance from anywhere, from any machine, and it's generally more efficient if you want to upgrade. So if you need a more powerful machine because you want to run some big machine learning model, and you need a GPU and 16 cores or something, you don't have to go out and buy it. Another disadvantage is that it can be expensive. Cloud costs can start running up relatively fast. So again, not too much depth, but just giving you some ideas so that you guys can start deploying it and putting it out there. So strategy monitoring. Again, this is my favorite part because the idea behind strategy monitoring is we want to answer the pretty difficult question of, is my strategy performing within the bounds of expectations, and should I let it continue? So there's three main parts to this. There's three main questions you want to ask yourself while you're monitoring. The first question you want to ask is the relatively straightforward question and more related to programming, and that is my strategy working how I programmed it to? And does that mean, and that means, is the logic behind the how data should be used to, rather, is the logic behind the pattern I detected between data and the market being effectively expressed by the code I wrote? And generally that'll include catching bugs, like maybe an order is not looking right. It's not executing at the right time expected to, because maybe I wrote some bug into the code, things like that. And you might monitor your orders and activity. This might include creating a dashboard, or if you want to get fancy, or maybe you just have some kind of log files. That's a simpler option. The second question, one of the more interesting questions, is our strategy performing within the range of our expectations? It'll happen relatively often that you deploy your strategy and performance right away isn't that great, or maybe it even starts losing money at some point, and you'll feel the urge to pull the plug. My strategy is losing money. The back tests were great. They was performing really well. Why is my strategy losing money? And this is where you really have to start using statistics, and be more long-term minded. So how do you start answering that question? So one way to do that is when you're doing your back test and your validation, you might have collected a lot of statistics, like what was the average Sharpe ratio uh, during that 5-year period? What was the maximum drawdown? What the lowest point after a peak that your strategy reached during historical data. And what that gives you is context behind what is the general scope of behavior for your strategy. So that while it's running live and at some point, your strategy goes into a drawdown. Let's say it goes down 12%. But within the back test, 20% was a maximum drawdown. You might say that it's actually still within range and I should let it continue and hopefully it'll climb back out. Of course, if it drops to 30% drawdown while the historical one was 20%, you can have good reason to pull the plug. That's one example of how you can start using statistics to determine whether your strategy is performing. Another question you should ask yourself is there room to improve our strategy? This can be on the insight level or the pattern level. Maybe the pattern you detected was slightly not as great as it could be because there's some extra caveat you missed while actually looking at your strategy and comparing it to the decisions it makes. It can also be on the risk management level. Maybe your strategy, besides the insight, is using stop losses, but you're noticing that your strategy is always getting stopped out, right? So you might want to improve your stop loss, maybe giving a bit more breathing room to capture more profits. So those are the 3 questions you should be asking yourself while you're monitoring. So that was kind of like a brief generally surface level. We got kind of deep into the ideation and the building part, but hopefully it gave you a big picture idea of how to approach the problem of algorithmic trading. Again, I think most people see it as this really unapproachable subject because there's so many things involved. And a lot of people get stuck at the first part, which is what idea should I build and how do I even build it? So that's why I spent a bit more time on that. And if there's interest, we can do more office hours on the monitoring and deployment and back testing. Those are a world of its own and deserve their own dedicated time. Finally,
Perfect.
Sorry.
Yeah. So we do have a trading competition coming soon, but we're gonna share the details later for everything. I think it's gonna be around 2K in Ethereum. We're gonna share the details, so please keep posted in all of our channels. It was great, Raul. Thank you for creating this detailed presentation, and we now welcome everyone watching to submit your questions on our community Slack and Discord under the hashtag Q&A thread. And are you ready for some questions, Rahul?
Let's do it. Let's get those
Okay,
questions.
perfect. Let's see. So, okay, one question. How do I deploy to the cloud? What monitoring tools do I need?
Okay, so there's 2 parts to that question. There's the deploying to the cloud. So there's a lot of ways to approach that. One way is to pull up a compute instance, maybe on AWS. That could be EC2 or maybe DigitalOcean. I like that. And then clone your code into that and just run it as a script. You can also Dockerize it and then do the same. Really, I would learn a bit about cloud technology and how to spawn up compute instances. The second part of the question is how do I monitor my strategy? The fanciest way of doing it is to use a dashboard. And we are working on some open source dashboard tools to hopefully help you guys with that. But another simple way is to just simply periodically get order data or position data, um, and print it out. Uh, that's another option. Yeah.
Okay. We have another question from Discord. How could one best go about building an algorithmic backtesting system with Alpaca? It's a
Yeah.
somewhat technical, but to clarify, this is two things if possible. Ideally, backtesting for a selection of stocks or results from screener and not just one stock's historical chart.
Okay, I see. So how do you build a strategy that uses possibly a basket of many stocks, if I understand correctly? If I didn't answer, I know there's no back and forth here, but if I didn't answer your question, if I didn't get your question right, maybe you can ask again later. But I'm going to answer that question. So if we're trying to tackle a strategy that potentially looks at thousands of stocks, one tool I like is there's an API by Intrinio and there's one by Finviz. You can find the Python packages if you look on GitHub or if you Google it, and lets you screen based on a few different parameters uh, across, I think, a basket of a couple thousand stocks, like 5 or 6 thousand. That's one way to do it, and that's easier than generally building it on your own. So that's the route I would go.
Okay. Okay. If somebody has a custom code in Pine and knows how to write code in C but not Python, what steps they need to take to start auto training with Alpaca API?
Okay, so you know how to write in C, but you want to learn Python. Um, that's more of a question, like, I would say, to learning the language, right? Since the API doesn't change based on Alpaca's API doesn't change based on much of the doesn't really change based on language, right? It's language agnostic. Of course, we have SDKs in Python and C Sharp, and so what I would suggest is learning Python and getting to a level sufficient enough to start playing around with requests. So you can use HTTP requests using Python, and maybe even start using the SDK on that we have for Python. There's great documentation for it, so you can look through that and look through the examples. I'll suggest that.
Okay. Another one. I'm trying to create a WebSocket connection to get real-time data using Alpaca and then ingest it into a data frame. Any guidance on this?
Okay, so if you're ingesting into a data frame, this is a really interesting question. Uh, so you're updating a data frame live with live data. So there's two parts. You're ingesting WebSocket data. That part, I'm assuming if you haven't done that part successfully yet, there's a couple of guides we have how to get WebSocket data. And for example, let's say bar data. And the second part of that question is how do I ingest into a data frame? So there's ways to append to a data frame, new rows of data. So that's one way. Or you can create essentially you want to append new data to that data frame every minute. Um, you can add it as a row if your index is timestamp, right? You have the timestamp, you have the columns of data. You should be able to add it in as a row. I don't remember the exact pandas operation, but it's probably out there on Google.
Okay, so they're asking us, will the code be available on GitHub?
So yes, we will provide not only the code but this entire slide
Yeah.
on for you guys, because there are some resources we haven't got to at the end on top of the code that I think you'll find useful.
Yeah, we'll definitely share the link to the presentation and pin it on the live so that you guys can access it at any time. How do I integrate Alpaca market data into my algo?
Okay, so there's two ways to interpret that question. The how can mean like a technical how, like what's the actual specifications. There we have some guides on how to request data. If the how is in what context do I integrate Alpaca's market data API into my algo, I would suggest first think of an idea, a strategy, and then find what data is required to implement that idea. And if it's Alpaca's market data API, it's Alpaca's that you can use that. Yeah.
Okay. Okay, this question we already got. So they're asking about Roth IRA account. We currently don't support this at the time, but keep posted on all of our sites as we start, bringing stuff to Alpaca. You guys will know, and we'll post on all of our channels. Um, what is the best language for algo trading?
So that's another great question, because each language has its own advantages. I think for the majority of us, Python will be great and be the preferred language because it allows such easy data manipulation. It's generally readable. Um, there are situations where you might want to use C++ or a very high performing language because your strategy needs that high performance to interact with the market quickly. So each language, the language depends on the need or the strategy you're building.
Okay. What what okay, what are some of the best architecture practices?
So if it's code architecture, hopefully the part about building where you talk about the gathering data, computing the signal, and outputting some trading decision is kind of a good way to organize your code. Uh, because I would say 99% of strategies will fit that criteria, right? So that's the best way to organize the code. Um, Hopefully that answered your question.
Okay, another question from a YouTube user. Would you recommend using algo services provided by a third party? Trying to code by myself, but it's so hard. I saw there are other apps featured on Alpaca. Is that an easy way for me to go?
No, that's another way too. There's a few different services that are no code, right? Like Composer.trade, I believe, Trellis, and really it's still the same principles, right? The only part that changed is the building part, and the building part, on some sense, is about expressing the idea in a way that we can test and deploy. And if that's writing out the code, so be it. But that can also be using a no-code tool like Composer.trade, which lets you do plug and play with indicators, and it's a no-code way of doing it. Uh, there's also other options where it's a bit more code, where it creates the background of all the tools you'll need, something like Quant Connect or other backtesting or trading platforms where you can integrate with Alpaca. So those are a few options.
Okay. What is the best channel/platform to get support from Alpaca?
So if you need technical support, the best place to reach out is support at alpaca.markets. Um, that's where we have a dedicated support team monitoring and answering questions. We do have other channels, but they're not. Some of them are actively monitored, some of them are not. Community Slack is one of them. We also have a Discord. We also have a forums. We try to stay
Okay.
on top of them and answer questions as we see them. But the best place if we need technical help is support at Alpaca.markets.
Okay. Now, this is not a technical question, but someone wants to hear from you what your experience with algo trading is.
Yeah. So it's been a long-winded one. So my journey with algorithmic trading uh, started with just trading first, right? And I found that I'm pretty bad at like making decisions in a emotionally heightened state that comes with just
Okay.
discretionary trading. So that's what motivated me to start. And then I worked at Quant Connect a bit, where I really got into algorithmic trading, built out a bunch of trading strategies, uh, and I learned a lot about the trade there, uh, no pun intended. And that that's been mostly my journey. If I do trade on my own. I run some strategies on crypto, mostly trend following strategies. Yeah, that's been my journey.
Perfect. Is there like a project that you implemented that you saw results?
So results is a subjective one because I've saw results for a period of time, and that's what usually happens for strategies. They stop working at some point. So, for example, I had this trend following strategy that had a Sharp of about 2.2, and I felt confident enough to deploy it. Um, so that's results for me. Um, did I run it long enough to get returns? I did, but I don't. It's not my main focus in day to day anymore. So I at some point I just pulled it off. So it's I have had strategies that have been profitable for a period of time.
Okay. Okay. Is Alpaca suitable for scalping strategies? How stable the API is for quick order executions?
So our order management system can execute an order at about 1 millisecond response latency rather. So it's relatively fast, um, and we have a pretty high uptime. We have a status page if you want to check uh, whether our APIs are up or down, and our engineering team is great. We are if you want to get more details on the exact uptimes, how many nines we have in our uptime, I would reach out to the engineering team. Um, but yeah, we're pretty good.
Okay. And then what is the correct way to report a bug? Is it with support at Alpaca?
I would say I would reach out there first. Um, if you have a bug with the API, there's also we have this old repo, but um, so it depends on what type of bug. If it's a bug with the SDKs, definitely submit it an issue to the respective GitHub repos. Um, if it's a bug with that you suspect is with the API, I would reach out to support at Alpaca.
Okay. Another question. What are some of the better books on algo trading?
So there's a couple that I like. I have a list at the end. Maybe I can go over here. There's a few book lists here, um, and this one is a bit more beginner friendly. It's by Ernest Chen, and if you don't know who he is, he wrote a really famous book on algorithmic trading, um, and his book is a pretty good book on getting started. There's a few others I like. There's this one called Finding Alpha, um, which is more geared towards the inspiration part, the ideation part. There's also subject specific books. There's one on pairs trading that I like. I forget the author, but it's just called Pairs Trading, and it's a yellow cover with black and yellow cover. Um, a few other books. There's a really if you're into ML, if you're versed in ML, there's a really great one by I forget the guy's name too, but Advances in Financial Machine Learning. That's a great book as well.
Okay. I think that's okay. We have one more question, and then let's go to the next stuff. Is Alpaca suitable for forex trading? What are the penalties requirements for HFT on forex?
We don't support currency pairs. Like if you want to trade Euro USD, we don't support that. Right now, as of now, Alpaca is equities and crypto.
Okay.
Yeah.
Um, will you have office hours for coding and implementing various ideas? So we will have more office hours, for sure. This is our first one. We would love to get feedback from everyone, see what you'd like to see, right?
Yeah, definitely. And we would love to get some feedback to know which parts have the most interest, and we'll probably make a few of those, few office hours on those. So if it's like on back testing, we can really get deep into that, test out various back testing tools, try to see how we can understand the statistics and
Mhm.
um, things like that.
Okay, let's see. Is there a limit on the amount of orders or trades that someone can do using Alpaca? Other brokers have a limit and will charge $2, around $2 per trade if the limit is exceeded.
As far as I know, we don't have a limit. There is a rate limit, um, although I don't know if it's on the trading API. Um, my answer is, as far as I know, there isn't a limit, and like you should be able to submit thousands of orders, tens of thousands of orders. If you're talking about millions and tens of millions, maybe I would definitely follow up on support at Alpaca Markets. There might be some things there.
Okay, perfect. So let's see. We have the next. I hope all of your questions have been answered. I know we're getting a lot. But in order to use Alpaca's trading services, you'll need to sign up for Alpaca's trading API account and retrieve your API keys. I hope this was really helpful for everyone. We do have additional information. You could check out our resources. Um, if you could share the next slide so that we can share it with them.
Sorry.
Yes. So we have documentation, learn articles, join our developer Slack and Discord community to connect with Alpaca traders and developers.
We also have a bunch of forums that I like. So of course we have Alpaca's forums, but there's things like Quantocracy. I really like that Reddit algo trading forum subreddit. There's a usually pretty interesting post there. If you're more into research papers or articles, Archive has an entire index on quant papers specifically that you can use. There's also the Journal of Investment Strategies. Over here, I find that research papers are a bigger investment, a time investment to get ideas, but sometimes they're great for finding new ways of thinking about strategies. I also really like reading articles. Of course, we have alpaca.market/learn, which has a bunch of articles written about either using Alpaca services or trading strategies. There's a blog by Ernest Chan I really like, the one that wrote that beginner friendly book. There's a lot of cool ideas as well. And then there's two book lists. One is beginner friendly. And then the other one has a bit more subject specific books.
Perfect. So we will send a Google form via email for everyone who registered. And I know we've been getting comments about, the format of office hours and if there's going to be more developers from Alpaca joining voice chat and stuff. We'll see what we can do. We'll see how what our users say and see what we can implement in all of this. Um, we do again about the trading competition. We have is launching soon, so stay tuned to learn more about the competition rules, eligibility, and more. It's probably it's coming soon. Yeah, and then let's go to disclosures. We're still getting so many questions.
Do we have time to answer a few more, or are we like near the end?
I think we can leave the disclosures slide and
Okay.
just answer questions, and then we'll be done.
Okay.
Um, what API calls come under the 200 per minute throttle?
Um, if I'm not mistaken, it should be just the market data API. I don't believe the trading API is throttled, although if I recall correctly, you can find the information in the documentation. Of course, if you look to the docs, then you go to the trading section. The information on rate limits there.
Okay. And then how are shorting fee implemented and reviewed before submitting trades?
So we have like a flat fee, I believe. It's like a overnight rate, um, or like an annualized rate charge charge based on overnight holdings. Um, although don't for more information, I would check out the docs there. These are a bit more in the details.
Okay. And then so they're asking about the prices for the competition. Of course, we have prices. The prices
Yeah.
is $2,000 in prices paid out in Ethereum, minimum of $1,000 portfolio balance to participate. Winners determined by their time weighted return during the competition.
So if maybe I can explain a little bit further. So it'll be a live crypto trading competition, meaning it'll be based on your performance in your live account. Any account with $1,000 in the portfolio will immediately be submitted or applicable to win the prize. Um, and we're using a time weighted return here just to filter out any noise from you guys either depositing money or withdrawing money from your account. That can sometimes distort returns. And that's as much. For more information, stay tuned. We'll definitely put more news out about this.
Yes, for sure, everywhere in socials. I hope you guys have your Alpaca account, and we'll see you for more office hours, I guess. Thank you so much, Raul, for this detailed presentation.
Yeah, it's been great. Hopefully, you guys enjoyed it and found some value from this presentation.
Sounds
Bye.
good. Thank you. Bye. Bye, everyone. Thanks for joining.